Good news is we're not seeing the tariff impact on the inflation data as of yet. It's Tuesday, May the 13th. If you like this podcast, please subscribe, hit that alarm bell. You can share it with friends, family, and colleagues. What we want to do today is dig a little deeper into the consumer price index data that we got today for the month of April. I think there was some expectation we'd start to see some of the tariff impacts show up in this data, but we did not. Let's dig into these details. When you look at the headline consumer price index, you see that it came in a slightly weaker than it had anticipated at 0.2% versus a 0.3% expectation. At the core level, it was the same thing, also 0.2 versus a 0.3% expectation. When you look on a year-over-year basis, so this is also what the Fed's going to be looking at, year-over-year at the headline level came in better than expected, 2.3%. It's lower from 2.4% in March and better than the expectation of 2.4%. And there was really no big surprises in the core level either, because that is rising on a year-over-year basis at 2.8%. So let's go into what impacted this report today. So first of all, energy prices were a big detractor from CPI, so that did help. Oil, if you go back to the month of April, it was down about 20% for the month. So that was a big impact when you look at the headline level. You saw gasoline down about a tenth, but on a year-over-year basis, now down almost 12%. When you look at airline fares, this was another big reason the report was relatively tame. They've been negative in 6 out of the past 8 months. And what we saw on a year-over-year basis for the month of April, it was the biggest drop we've seen since 2023. Some of the areas that we thought would be impacted by tariffs, think about automobiles. New vehicles on a month-over-month basis, prices were flat. And actually used cars, the prices were negative at 0.5. So we're not seeing it really show up there. We're seeing some of the discretionary sectors, whether it's, apparel prices, these were lower as well. This is keeping that index and that inflation data relatively tame. Now, what does this mean going forward? Well, the markets liked this today from the bond perspective, so yields are lower and prices are higher. Equities are mixed here this morning, and what we're seeing is that there's some individual names that have been that are dragging the Dow Jones lower, but the S&P 500 has rallied on this, and it's actually positive now year to date. The Dow Jones, even though it's having a weak day today, it's relatively flat. It's only down 0.14% year to date. And the NASDAQ is trying to claw back some of those losses. On a year to date basis, it's now down only 1.5%. So what's the Fed going to do with this data? Well, they meet again in June, but the expectation for them to cut interest rates in June is relatively low. It's about 5 to 10% probability that they'll cut interest rates in June. It does pick up when you get into July. You're looking at a 30%, and then you get over the 50% as we get into the second half of this year. And this, we think the Fed's going to take this as welcome news. There was no major surprises, no big deflationary environment, so they can feel comfortable, sit back, absorb some more of the economic data that may get an impact from some of these tariffs. That's all we have today. There's a lot more data this week. Thursday and Friday, we'll have more from the consumer. We'll have more on the consumer confidence as well. So we'll be back to give you any more updates that we see. And again, if you want a history of our podcast, please, you can go to marketswithmegan.fm. Thank you.